Hi, my name is Cece, and this is Everything Crypto. There are two myths that I've found to be pervasive among the crypto community. They're online in forums and in YouTubers' videos, and even among attendees at blockchain and cryptocurrency conferences and conventions. The first myth is the one that probably hasn't fooled you, but given how much misinformation is out there, you very well may believe the second myth, and it has some serious implications.
It's internet money.
Thousand-fold increase.
Governed by the laws of mathematics.
A huge wealth transfer.
It's one of the most important inventions in the entire history of humankind.
The first myth is that an individual doesn't need to pay taxes on Bitcoin gains, either because tax legislation and Bitcoin trade classification isn't yet settled, or because Bitcoin is anonymous and authorities will never be able to figure out what holdings you have or how much you've made. The second myth is that you only need to pay taxes when you sell Bitcoin for US dollars, or another government-issued fiat currency, because this is the only taxable event, and that you don't need to pay any taxes for trades between cryptocurrencies, because these are not taxable events. Unfortunately, this is not true. Every trade, whether it involves fiat currency or not, is a taxable event. So if you trade, for example, Bitcoin for Ethereum, and then Ethereum for Ripple, and then Ripple for Bitcoin, and then sell your Bitcoin for US dollars, that incurs 4 taxable events. So in other words, provided you have any gains at all, you have to pay tax when you sell Bitcoin for Ethereum, and again when you sell Ethereum for Ripple, and again when you sell Ripple for Bitcoin, and then again when you sell Bitcoin for dollars. So let's take a closer look and discuss what we can do about it and how in the world we can keep track of the cost basis of our dozens, hundreds, or even thousands of trades, which can be especially tricky if we're using multiple wallets and multiple exchanges, some of them decentralized and without any accounts or records to refer back to in order to trace our steps. First, putting aside questions of ethics and legality, Bitcoin is not all that private, and you should assume that the IRS or whoever collects taxes in your country will know about your transactions and holdings. If not now, then one day soon. The IRS is already on the case. In a contract obtained by the Daily Beast, it was revealed that the IRS has been paying a company called Chainalysis to help identify the owners of digital wallets. And this is the only thing standing in the way of knowing all about your crypto activity. That is, Bitcoin is only anonymous in that your wallet address is not your name. But once you are linked to a wallet, perhaps you share your wallet address with somebody to receive payment, or pay for something somewhere and reveal your identity. Then everything else, including your balance and every transaction you've ever made, is publicly available and forever stored in the blockchain. There are true privacy coins like Monero and Zcash, but Bitcoin is not one of them, and neither is Ethereum, nor Litecoin, nor most others. Having decided to pay our taxes, we can now address the not-so-trivial headache that doing it will entail. Bitcoin and other crypto, despite being called currencies by the community, are not considered currencies by the IRS. Instead, they are officially regarded as intangible property. This means that unlike currency, where there is no taxable income or loss that accompanies its every use, which would be ridiculous, with cryptocurrencies, that is exactly how it is treated. Some have been trying or planning to use Section 1031 like-kind treatment for their trades, where income and loss from all trades is deferred. But despite some ambiguity in the law, most professionals have believed that crypto trades would not be eligible for this treatment. All that ambiguity is gone because just this week, a tweak to the definition of property that is eligible for the like-kind exemption was included in the Republican tax reform bill. In communication with Jeff John Robert of Fortune magazine, Suzanne Walsh, who is a partner at the law firm Murtha Kalina, explained that due to the change in Section 13303, it is crystal clear now and without any ambiguity that Americans do have to recognize gains on all crypto-to-crypto exchanges. Now, depending on how active one is, the burden this kind of reporting entails is not trivial. Unlike traditional investment accounts, none of the crypto exchanges issue 1099 forms, like the one you'd receive from Fidelity, for example. Even if they were to provide them, they wouldn't be keeping track of your portfolio at large, which is a headache that might encompass multiple exchanges, wallets, payment cards and ICOs, airdrops, blockchain forks, and all income from mining or lending programs, and gifts, tips, and purchases. And the truly torturous task is calculating the cost basis and resulting gain or loss from all those transactions. Officials, like Representative Jared Polis, propose that the tax reporting burden for crypto users be lightened by reducing the requirements. but unfortunately, that proposed amendment was not included in the final bill. So what can we do? Well, I have found a solution that works amazingly well. First, using accounting software and generating the correct report shows an attempt to be compliant with the law.
Okay.
Personally, I was looking for something that could calculate taxable income and loss based on IRS rules, and that could generate capital gains and loss reports to support Form 8949 and other income statements. Cointracking.info not only does all of that, but it's also a really great all-around portfolio tracker that can use APIs from most major exchanges to automatically import trades and also imports from wallets, even hardware wallets. You can choose instead to upload CSV files or input any or all transactions manually. It also has a great mobile app with a widget that you can look at once per minute to see your gains and overnight when you should be sleeping but instead reach over to grab your phone to see if you're rich yet or maybe dead broke. It's the only tracking system that includes all currently listed coins, including ICO coins from the first day they are listed. It does all the work tracking your cost basis and delivers the information in a well-designed and appealing way. The service is free for up to 200 trades and can generate all your tax reports without cost. There is a paid tier for those who trade more frequently, but those are the traders who need this the most. So if I've been at all helpful or informative, please give my video a thumbs up. A simple click is all it takes, and it really will help support my still brand new channel. If you're going to sign up with cointracking.info, please use my referral link. It won't cost you anything to do so. Thanks for watching!